Welcome to the podcast. Today we're going to talk about a subject which unfairly has been given a little taboo, but there's actually truth and sincerity behind it. And I brought what I believe to be one of the best people in Orange County, if not the state or the country, to clear up some thoughts and concerns and some facts about reverse mortgages. I am here with the man, the myth, the reverse mortgage specialist legend, Kevin Kaltenbach. Kevin, please introduce yourself to the crowd and let them know a little bit about
Tony,
you.
thank you so much. That was a heck of an introduction. I love it. Personally, I've been specializing in reverse mortgages now for 22 years, if you can believe it. So
22.
I've done a few of them.
You've done a few.
Over my day, yeah. But as we're going to get into, there's a lot of misconceptions, myths out there about the program that we're going to try and dispel today, Tony, and get people the real information that they really need to make an educated decision whether this is a good program for them or not.
And that's fair because you and I, like I'm a real estate agent, I'm full-time, I love what I do. And there's one thing amongst many things you and I agree on is we don't push, we don't sell,
right.
We inform and we share with compassion and understanding. And that's why for the longest time I wanted you on the show, because when I see what I think is an injustice, like reverse mortgages, for example, it's not fair because there's probably a lot of people that could have benefited in the past, didn't do it for false fears, and they lost out, maybe, God forbid, lost a home, or they could have had a better life. And money makes things better and easier for a lot of people.
It does. And let me take that a step further. So personally, what I've learned over as I said, over 2 decades of this, my job is to educate people, Tony. Let's let them know how the program works. They're going to make the decision whether they like it or not. But my job is to educate them, give them the facts, get their questions answered, and make sure that they have everything they need to make a decision that could benefit them for the rest of their lives.
Well, this is why you're here. And by the way, folks, this is not a commercial, but if you're going to be looking for a reverse mortgage, you have thoughts about it, you can call anyone you want, just like you can call any real estate agent. But what I suggest is if you're going to get the money, first and foremost, talk to Kevin. You lose nothing in a phone call.
That's correct.
It's okay for them to call you. Even if they called you and either used you is fine, but if they didn't use you, you're still okay to take those few minutes to help?
I am absolutely absolutely ready to help if they have questions. Maybe they're talking to somebody else. That's fine. If you want to call me and make sure you're getting the correct information just because of my knowledge, that would be fantastic. I would love to chat with you.
That's part of good service, right?
Just like exactly correct.
In real estate, I do talk to people and they say, I really can't buy, or I have a friend who's an agent. And I say, look, I'm happy to take a few minutes as a human being to help out. So speaking of which, let's get to the help right now.
Okay, great. Let's do it.
And I want to jump into the thing that I think unfairly gives the reverse mortgages a bad rap, which is, well, my mom and dad had this house for 30 years. They bought it for $200,000. It's worth $2 million. They got a balance of like $60,000 on it for whatever reason. But hey, Kevin, if you give them a reverse mortgage, well, hold on a second. Does that mean like in the future we lose the house? Is it still ours or not? What are the consequences? Because I want to protect mom and dad, because I've read a few things online and the internet never lies. So can we get right to that currently unfounded fear for reverse mortgage specialists like you who do things right? Because I'm sure there's many just like good agents. What is it about the reverse mortgage, the misunderstandings that either people who own their home have, and especially the children who might be 45 years old, mom and dad are 72, and they see you walking up the driveway and they go, hold on a second, buddy. Why don't you go ahead and let's get that out of the way.
Okay, great.
Please do. Please take the platform.
Well, and let me segue into when I meet with people, which I meet with people face to face, I want their children there, Tony. I want their relatives there. I want somebody who has an interest in what's going on with them to be at that kitchen table with us.
Literally?
Literally at the kitchen table. I mean, that sounds funny, but that's what we mean.
It's classic.
It's classic. That way we have all the information in front of us. We get the questions answered and everybody's happy about the whole situation. Again, it's up to them to make the decision. But what I found over my many years is having somebody there with them obviously makes them feel more comfortable, especially their children and things like that. And everybody's on the same page and everybody's happy.
Well, I think that's something, and folks of you out there, if you're too far away, if you think you're too far away to work with Kevin, if you are going to talk to a reverse mortgage person, maybe if you could ask them, well, can we all meet? And hopefully they'll say yes. Well, we just make phone calls. Well, you know what? In your business, meeting people in person, just like with real estate agents, the human connection means a lot. And with a family, mom, dad,
Right.
son, daughter-in-law,
Uncle, whoever.
uncles,
Yeah.
and they're all sitting at, picture this, folks, and those of you listening, try to imagine this if you're driving safely while listening. Imagine mom and dad, and God forbid you get the whole family together, like Italians. What are you talking about?
We're going to have a good time together, right?
Yeah, you can pull out some food. Well, if it's Italian, you're going to get food involved, so you're going to gain weight.
Yeah, I can't do that. I got to be careful of that.
So mom and dad are on this table, the sons and daughters, the uncles, the aunt, the nosy neighbor, and then there's you on the other side.
Right.
And in the beginning, just like with real estate agents, like, oh, great, like a used car salesman. And I got to change that belief in people because there's goodness in the good ones, and I try to be one. I think I am. So when they talk to you, though, they'll be able to get their questions answered in person. Everyone will have a say-so.
Right.
Ultimately, the mom and dad that own the house are the decision makers. So even if the kids said no, as long as the kids have a correct and clear understanding,
education,
chances are if they're going to say no, let's be honest, folks. If you guys have moms and dads that are old, I hate to say that, but we all get old if we live long enough.
Right.
But when you get old, the only reason I can see a son and a daughter saying, "Mom, don't get a reverse mortgage," is you want all that money out of that house when they pass it on to you, which I understand because we all need money. And you and I touched on this on a phone call. I love this point. Kids, you guys that are 30, 40, 50, 60 years old, who are parents that have 70, 80, 90 years old, unless you can guarantee that you can fund your parents every month until they pass. And what are the odds of that happening?
Yeah.
I feel like if I'm 75 and I have a son who's a surgeon and a daughter who's a CEO of Google, then maybe I won't. Yeah, I probably won't need you. And they got the $5,000 to give me because of those jobs.
Right.
The other 99% of us probably can't do that and give mom and dad $2,000, $3,000, $4,000 a month until they pass in another 30, 40 years. So I like to imagine one of the things, and I'm guessing the key thing is they come to you because, hey, I can't give my mom and dad a lot of money every month.
Yeah, they can't afford it.
Right. So why don't you take this moment, tell people what ways they can get money on their house.
Well, that sounds great. Now, let me take that a little bit. Let me back up a little bit to what you said.
Ooh.
So what I'm seeing now is, you're right. Maybe the son and daughter say, well, we want money, unfortunately, when mom and dad, when you pass.
You mean this?
Yeah, that's it. That's what they're looking for.
Give mom and dad
the green.
$3,000 or $4,000 of this a month.
Yeah, Tony, here's what's happening. People are, my bar is saying, I want to give my kids and grandchildren money now, while I'm alive, so we can enjoy it together, whether it's traveling together, helping them with a down payment on a home to purchase a home, helping them buy a car, whatever the case may be. So that's what's happening now. The whole program has changed in regards to the way people are thinking, the way people are using this program. So let's get back to your point of how can people receive money with this program. Remember, there's never a payment required ever. Now, if somebody wants to make a payment with this, Tony, they can, but they're never required to. Okay? There's three ways people can receive cash from this program. There's a lump sum cash. There's also a line of credit that's available for people that they can access anytime they want, and any amount, it's up to them, wired right to their bank account. And then they can receive a monthly payment if they're so inclined. Okay? But let me take that a step further. They can do one of those, two of those, or all three of those. And here's the kicker. If something changes in life, which it always does, let's be honest, especially when it comes to finances, that program can be changed throughout the life of the loan. So they're not locked into, okay, I'm getting $500 a month and that's it. No. Who knows? Things may change. They say, well, I need a little bit more. No problem. Can be changed throughout the life of the loan.
So unlike a typical loan when someone buys a house where your payment's $2,850 a month and you got to give it to the bank.
Yeah.
In your case, what I'm hearing you say is one, the money like this right here.
The green.
I'm holding the green, folks. Those of you listening, I have this stack of Hollywood money, which looks pretty good.
It's not real, trust me.
No, I'm a real estate agent. I have plenty of this in my pocket. Yeah, okay. If you think that's true, work with me. So this I'm holding in my hand, this cash.
Right.
Whereas on a loan, I'm giving it to the bank every month.
Correct.
But in your case, you're giving it to the homeowner.
We're giving it this way.
So
hence the term reverse mortgage.
Right, reverse. So you're giving them, now it's going to base on certain qualifications.
Correct.
Their age.
Yeah. Age, correct.
And also how much equity they have in the home.
Correct.
So it's not like they say, oh, I have equity, I'm 62, give me money. We want to make sure
it doesn't work that way.
You collect all the information.
Correct.
The truth.
Yeah, we have to make sure. Right.
Yeah, because you want to make sure they truly are qualified. Otherwise, the system gets damaged.
Right.
And it's not fair. So when you give them money, you can give them payments every month.
Correct.
You can give them a lump sum.
Correct.
And you said if they're getting payments and they want what you said, a line of credit.
There's a line of credit available also that they can access at any time that they want in any amount.
As long as it's within the grand total, I assume.
That's correct.
Some grand total.
Yeah, exactly correct. So say there's $100,000 in a line of credit, just using round numbers, obviously.
Hypothetical.
Then all of a sudden, oh my gosh, I need a new roof. I need $10,000. You request that $10,000, it's wired right to your bank account within 4 business days.
Especially because you've already screened and approved everybody.
Everything's already approved. Let me take that a step further. Now, everybody remembers the crash, right? 2007, 2008. What were banks doing with lines of credit? They were either freezing them or canceling, right?
Ooh, yeah.
We cannot do that. That's illegal. So no matter what happens to the housing market, you're guaranteed that money.
You touched on this when we were kind of joking on the phone.
Yeah.
I'm just playing pretend. I'm not saying it's going to happen and predict futures. But if the economy went really bad.
Belly up.
3 weeks later, the United States government comes on TV and some guy goes, "Thank you very much. You're on your own. Good night."
Yeah.
And people are sitting in their reverse mortgage house. Yeah. They're collecting let's say $2,000 a month, hypothetically.
Right.
And the market goes to like 1.
Instead
matter. Of 30,000 on the Dow,
correct.
It goes to 1.
Right.
Every month, you still pay them.
We give them that money no matter what happens to the value of that property. Guaranteed in writing.
And the line of credit doesn't disappear?
It does not disappear. No.
Okay, so let me repeat this back again.
Yeah, no problem.
I'm 78 years old.
Okay.
I have a $10,000 line of credit through the reverse mortgage company. I'm also getting $1,000 a month.
Yep.
And of course, before we started all this, one of the first things you did was pay off my mortgage and my liens.
That's correct. Yeah, we're
so you're the only person that I technically ultimately owe money to. Nobody else.
Right.
Okay. Tomorrow the Dow Jones hits 0.
Right.
Next month, I still have my line of credit. I still get my money. Come hell or high water, period.
Guaranteed by the federal government.
So what a son or daughter or family member should be hearing us say together, unless they can do better on that guarantee of giving their parents money for the next 1 to 50 years, let's say.
Whatever it may be, correct.
Because you remember, as a doctor, you might maybe lose your job, God forbid.
Yeah.
What if he?
Well, things change.
Happen.
Life changes.
But
let's be honest.
What you're saying is, and you're telling the honest God truth that if they're getting a payment and there's a line of credit, let's say, no matter what, it is always there. Period. End of sentence.
Guaranteed.
Wow.
In writing. Yep.
So how do they get that? What are the basics of the qualification? Obviously, you got to call your reverse mortgage specialist.
You do, because every circumstance is different. So let me give you a little details on that. So what we do now is we make sure that people have enough monthly income, residual income, to continue to pay their property charges, Tony.
Like the rest of us.
Like the rest of it, we still have to pay that stuff, correct?
I do.
Have to pay your property taxes. Have to pay your homeowner's insurance, correct?
Yep.
And if you have HOA dues, you still have to pay those.
We love paying our HOA, by the way.
Yeah, that's a good time. By the way, this program doesn't change any of that. Okay, a lot of people, well, you're going to do a loan on my home and we're going to reassess the property for the taxes, right? False. Nothing gets reassessed. Your property taxes are going to stay the same whenever you do this. Doesn't change.
So just like with my home, however, my taxes, everyone's got their areas and their percentages and their process. So if I'm living next door to an elderly couple, they're both 80 years old, they get a reverse mortgage.
Right.
I buy my house the month before. Everything gets assessed. I have my taxes. I look at the bill. I start crying. But hey, my kids live in Irvine, and we get to go to school here. So
there you go.
I'll just take this stuff right here,
the green,
and hand it over to Irvine in California every month. But
we do not reassess the property.
So when they live there for 35 years, I live there next door for, let's say, 1 year. Yeah. Obviously, my taxes are through the roof.
Yeah, of course.
I'm still young. So when they get a reverse mortgage and I see an appraiser coming up, I should not be thinking, oh boy,
here goes my property taxes.
That $1,000 a year they're paying on taxes compared to my, I don't know, $12,000 a year.
Yeah.
They're going to be paying $12,000 too.
Yeah. No, not true at all.
Okay.
Whatever their property taxes are currently, Tony, stays the same.
So you're telling me somebody in Turtle Rock who's been there from day one, who's paying like $900 a year in taxes.
Let's not say that, okay? That scares me.
I heard there's somebody paying like $900 a year because they were there when it was dirt only. God bless them. I asked them if they want to sell. They go, no. Never.
No, of course not.
Why would you, right?
Yeah.
So, but
they want to stay in their home where they're comfortable.
Right. So
hence the reverse mortgage, right?
So if let's pretend they are paying $900 a year on taxes, and that property went from $80,000 and when dinosaurs ruled the earth.
Right.
Now it's worth say $3 million,
Yeah.
but they're paying.
Let's hope it is, right?
They're paying peanuts on the house.
Stays
so
the same.
when you show up,
Stays the same.
so you give them money every month.
Yep.
You pay off their mortgage balance.
Correct.
You give them a line of credit if they want.
Right.
And the taxes don't change.
They do not change. Property taxes do not
tax.
change. Right.
Right. Meaning that would change under its normal circumstances.
Yeah, they're capped at 2% a year.
Exactly.
Yeah, it doesn't affect. Stays under Prop 13.
Wow.
Yeah.
So
isn't that great?
So that sounds to me like, and it sounds to me that I'm stunned because hearing
I
you
know.
say all
Everybody
this,
is.
it's like, how do you not get this when you
What's the
qualify?
catch? I know.
Exactly.
Yeah.
Well,
I
the
know.
catch is you have to
I
own
hear
a
it all the
house.
time. Yeah.
You got to own a house.
Right.
You got to have enough
Some equity,
equity,
depending on their age and interest
the
rates
age,
and stuff.
And the age is
minimum of 62 years of age for the FHA program.
so if they're 62, they have home ownership.
Yep.
And based on your calculations, when you meet them, they're going to look at the equity, look at their interest rate, and you're going to say, okay, based on everything I see, I'm overgeneralizing. Based on all the information you collected, we're going to give you this much a month.
X amount of money, right?
So when mom and dad and the kids are sitting around the table and you crank all this out and say, okay, we're going to pay off your mortgage. You have two mechanic liens. We're going to pay all this off. We're the only ones that are in position now.
Correct. We're
like day one with the bank. We bought a house, you owe me money.
And one of the things I want to elaborate on, so a lot of people say, we talked about this before, Tony, is people say, oh, okay, Kevin, your company or the federal government or whatever.
Right.
Once we do this, you own my home, right?
Oh.
No, not true.
Yeah.
This is a mortgage. This is a lien against the property.
Like any loan.
Like any loan, exactly. That's exactly what it is. The kicker is you don't have to make a mortgage payment every month.
You get money instead of give money.
There you go.
So it's like the mafia.
Perfect.
It's like the mafia coming to my house saying, "We're not here to collect. We're here, Tony. We're here to give you this, sir, because we heard your families have been good.
Right.
So every month we're bringing this to you.
Right.
Whereas most people are handing it to the bank.
Yeah.
So with the reverse mortgage,
yes, sir.
Let's get to that point because I know people are probably screaming at the podcast, going, "Get to what happens when."
Okay, got it. Yeah,
so now
that makes sense.
Mom and dad have been collecting hypothetically $1,200 a month.
Yeah, whatever it is.
Let's say there's no other debt, and they're collecting that, and they're comfortable.
Right.
Either they want to sell the house and get a little condo,
perfect,
Newport Beach. Call Tony, I'll help you get a deal.
Yeah, you will.
And we'll list that house.
He's good. He's good.
Hey, come on, I'm a real estate agent. You want to sell that house? Talk to me. So let's say they want to sell the house. The kids are cool with it.
Okay.
Mom and dad want a little place, a condo.
Right.
They don't want to handle anything. Let the HOA do it.
Correct.
But they go, well, wait a minute. Hypothetically, we've collected $96,000 from Kevin with reverse mortgage. So if we have a $96,000 balance because we collected $96,000 over the year, but we want to sell our house, can we just go ahead and sell it? And when we go into escrow, when we go to close, instead of the money going to the bank, which they don't have any mortgage anymore, it goes to you like any other home loan. Yeah. And the rest of it's theirs minus expenses and commissions and stuff.
Yep.
So it's the same process.
Same procedure.
The difference is it's you, not Wells Fargo.
That's exactly correct. 100% correct. So what happens is, by the way, anybody that gets into this program, Tony, they can sell their home anytime they want.
Mom and dad could sell the house?
Anytime. They can keep it for a year, 10 years, 20 years, 30 years. It's up to them. There's no term on reverse mortgages. So if they decide in 5 years, we did a reverse mortgage, this is great. But like you said, they're in a two-story. Maybe they want to downsize. Maybe they want to get to a smaller home. Sell the property. Call Tony. He'll help you sell it and list it for sale. The reverse mortgage gets paid off. Any equity left in that home goes to wherever my clients or borrowers say it goes. We get none of that. We get our money back, plus obviously there's interest that has accrued.
Right, just what they owe you.
Just what we owe. That's what they owe us. That's it. We get nothing else.
So God forbid, mom and dad pass away.
Yeah.
If they both pass away, the kids get the house. But like anything else, just like a bank loan, they say, well, hold on a second.
Yeah.
There's money owed back to us,
Correct.
just like a loan.
That's right.
So either the kids can, like one of the kids can say, you know what, I have a ton of equity, or I got a big money in the bank. Let me just pay you only what's owed.
Only what's owed.
So if there's like $600,000 in equity, but they borrowed over time, $80,000.
Right.
You get your $80,000.
They get the rest.
The rest of it is their
theirs.
house is theirs.
It's theirs.
It's literally that simple.
Yeah. So the heirs have two options. Okay. They say, yeah, we'd love to buy that home. What do? They can come in with cash or refinance, with a loan, pay off the reverse mortgage. The home is theirs.
Or they can sell it.
Or they can say, we don't want to live here. We live somewhere else. We're happy. We don't want mom and dad's home. They're going to find an agent, Tony.
Right.
They're going to list the property for sale, sell it. What happens? The loan, reverse mortgage gets paid off. Again, reiterating this, the equity in the home goes to wherever my borrowers say.
So while mom and dad are collecting money,
right,
let's pretend the market's amazing for 3 more years.
Okay.
So instead of like they bought it for $100,000, years later it's worth $2 million.
Right.
Then they meet you.
Right.
Things get paid off. Now they're collecting money from you.
Yes.
Or a lump sum or a line of credit, and they use it. One day when they pass away or sell it, when the kids are involved,
Yes, sir.
and mom and dad, they want to go to Florida, they just give the house to the kids, but still the kids have to step in and say, okay, Kevin, listen, I see mom and dad have collected $164,000
Right.
over the years.
Right.
Then they've either passed away or they want to be out of the house,
Right.
whatever.
Yeah, they want to
But they can come to you and say, now, Kevin, if I pay you back that $162,000, the house appreciated $300,000 more. That's all mine if I give you the money, right?
Guaranteed.
Okay,
That's correct.
so
we get none of that.
So you only get what you're owed.
We get what we're owed. That's it. Nothing of no prepayment penalty, no hidden costs. We don't get any equity share, none of that stuff.
So
it's
magically,
their property.
if that house goes up $100,000 in value
Right.
every year for 3 years,
Yep.
that $300
That's
extra
theirs.
$1,000,
That's theirs.
they just got to pay you what they owe you,
That's exactly correct.
and they're done.
They're done. That's it.
Whoa.
Isn't that amazing? I know.
There's no secret catch like,
No.
well, we get like 1% of the value and nothing.
We get nothing. We get our money back. That's it. Nothing above
Which
and
is the
beyond.
money you gave them plus interest.
Plus interest, that's
just like
accruing,
any
right.
loan.
Just like any
So I'm
loan.
not hearing anything different other than they have to be of age. There are
Right.
certain qualifications that you
Yeah,
have to
correct.
go over
That's
specifically
correct.
beyond this conversation.
That's right.
The equity, the age, they have to show they have enough money to
Right.
make their payments on their property taxes, their HOAs.
If they
their
have
insurance,
HOAs,
if they
yeah.
have
Yeah,
it.
they may
So
not,
the
right.
things they normally paid anyway before meeting
Yeah,
you,
that's it.
they have to show they can keep doing it.
That's correct.
Then you could set them up, assuming they qualify. And again, as the house goes up in equity, maybe they sometimes pay you back if they,
Right.
like any loan.
Right.
But ultimately, if that house is hundreds and hundreds of $1,000s more in equity,
It's their money.
and the kids pay you off, or mom and dad pay you
Yeah.
off, they don't lose it.
Nope.
So they're safe.
They do not lose it. It's
Wow.
guaranteed. It's their money. We get none of that.
So to kind of summarize this whole thing, mom or dad or mom and dad,
Or both, yeah.
they qualify. Let's say they qualify hypothetically. Whatever loans or liens are there get paid off.
Right.
Just as if they're selling the house, people got to get paid off.
That's right.
Moving forward, they get paid either the lump sum, the line of credit to use as at will,
At will, whatever they want it for.
like a home equity line of credit.
we have no say in how they spend their money. It's their money.
Wow. So, and the only limitations are, besides qualifications, is it's how long they live.
Correct.
Right? Because when one passes, which unfortunately happens, and let's say, God forbid, it's dad, and mom is there, and she's like, well, hey, wait a minute, we borrowed this. I was 55.
Yeah.
So you're not going to come in there and say, give me my money.
No.
What happens when
Yeah.
dad was qualified by age
Okay.
and mom was not at the time? 10 years later, mom is
Right.
now 62, but dad died.
Right.
And you said that the day they started this, the age matters then.
Right.
And if the one who was age qualified, like in this example, dad, because he was like 65
Yeah.
or something, he passes. Does mom have to start, in this example, does mom have to start paying you back? Or
No.
what happens?
That's a great question. No. So what happens is that would be considered a non-borrowing spouse because because let's just use the wife as example. She was not 62 at the time.
Right. In
And
this
the husband-
example.
It's an example. It could be the other way around. I've seen them both.
Right.
So she can stay in that property as long as she likes. Nothing changes. We don't redo anything. Nothing happens. She can stay in that property as long as she wants. If she decides to sell, she lists the property for sale and sells it. Just
And then
like
you
any-
get paid back like any other loan.
exactly correct.
Do you have to, do you continue giving her the money in this example, or do things just stop?
If it's a non-borrowing spouse, that's someone who was not 62 at the time, that money will stop. If they were receiving money, that
Right.
money is not available to
So
them.
she can sit in the house.
Yeah.
In this example,
Right.
I'm not picking on moms. I'm just
Yeah.
picking one.
Yeah, no, I understood.
So
Understood.
she lives 12 more years,
Mm-hmm.
and during those 12 years, you do not come knocking saying, "Where's my money?"
She can stay there as long as she wants. It's her home.
So she doesn't get money, but she doesn't have to pay you either.
that's
So
correct.
it's kind of, it's literally quiet.
Yeah, exactly correct.
And she collects and she doesn't work and she
But
pays her taxes.
let's look at another way we could do this. If she is 62 or older now, we can possibly refinance her in that home and get her more money. But we have to look at a lot of different variables.
Well, there are a lot of variables.
Yeah,
So,
yeah.
so this is why I have Kevin here,
Right.
because you, as I said before, you're easy to find.
Right.
You're at almost all the real estate agent events, all our meetings. So there's a lot of people who know you.
That's right.
So in terms of the credibility standpoint, you're probably one of the very few people in the industry around me that I can look people in the eye and literally say, there are so many people, the professionals, the real estate agents, other lenders, title people, termite guys, so many people know who you are, as opposed to meeting somebody in a phone book or on the internet, which I'm sure is probably fine.
Yeah, it
but
is.
the fact that a ton of people know you, that if there was something quote unquote wrong with reverse mortgages, somebody would have said something.
Yeah, well,
by
after
now.
22 years, I've been doing this that long, and the program has only become more secure for folks. What I would say is, if you do find somebody else, make sure that they specialize in reverse mortgages. That's the key. Not somebody that just dabbles. Like, for example, myself, I only offer reverse mortgages. I've had people call me, Kevin, can I do this? Can I? I go, I'm sorry, I don't do those types of loans. I only do reverse mortgages. That is my forte. That's it. And if I may say one more thing, Tony, I know we're getting close to wrapping this up. HUD requires, Housing Urban Development, requires anybody who's considering a reverse mortgage to attend a phone counseling session with a HUD-approved counselor, mandated by the federal government. That's to make sure they understand the information that I'm providing, or anybody for that matter, is true and correct, and someone's not trying to swindle them.
Oh, wow.
Extremely important. So I wanted to throw that in. Just
so it's
to
a
make
little
sure.
policed. It's kind of policed.
It's totally policed. I mean, just to make sure that everybody gets, someone's not trying to take advantage of somebody.
Well, that's good, because people have worked a long time. Like anybody else, they worked a long time, especially back in the day.
Yeah, right.
Now things are getting busy and fast, and it's nice to see that as people get older, we don't want to see them scammed out of their house.
That's exactly correct.
That's like one of the most, other than death,
that's right.
That's probably one of those wrong things you could do to a elderly person. And I wouldn't want that to happen to somebody else.
No, of course not.
Which is why we have people like you. In this example, the reverse mortgages. I want people to watch this video, listen to the audio, and when they're done going, well, you know what? I may be a lawyer, but my mom and dad been in their home in Woodbridge forever. Maybe this is for them. So this way I don't have to, give them money.
Right,
Not out of lack of love. Right. But if they can benefit from their equity, so the children, the mature children who have the grandchildren, they can still use their money for their lives.
To get by.
They can let their home, their mom's and dad's home, fund themselves to enjoy their lives. And probably some parents who listen to us, they might be thinking, well, I don't want to bother my kids because I put them through college. I worked hard, I suffered, I risked. They're successful. I don't want to have to ask them for money. And I don't want them to see me in a way where they go, Mom, you need money? No, I'm fine.
Well, what do we all want? We want to be independent, correct? We want to be able to take care of ourselves, right?
Yep.
And you've got a home here with all this equity in it. What's it doing for you?
Nothing when it's sitting there.
It's sitting there. And you want to stay there. Let's see what we can do to help these folks.
I have a situation like that where the kids literally want to keep the houses that mom has. And I discussed with her a little bit about some vague basics of reverse mortgages so that she can do what she wants to do with the properties. But that's an example where the kids have a lot of probably too much say so. And that's a shame. But I like what you said, how you sit down with them and clear things up.
Get the questions answered correctly.
So they can make a good decision.
It's their decision, not mine.
Well, based on everything I'm hearing you say, I am sincerely stunned in a good way.
Well, that's great.
How fair and balanced and forthcoming this system of reverse mortgages sounds like. So even after this recording of the podcast, I know that if I'm in a situation where somebody's of age, I know I could respectfully bring up the reverse mortgage option.
Absolutely,
because I understand, without getting into this, you have a way that people can use a reverse mortgage to buy something else.
That's absolutely correct. Yes.
So it's not just collect and sit home. They can buy houses.
That's right.
So the short version of that would be, how do you explain that in 30 seconds or less, how they can use it vaguely on buying a house?
Well, if they're buying a second home, they can pull out cash out of their existing home and actually use that cash to purchase another property.
And live in which one? Live in the one
primary residence. The law is they have to live there at least 6 months out of a 12-month period.
Oh.
So let's say, for example, somebody would like a home out in the desert. Let's just use that for example. Okay, I can't qualify for a loan because why? Because I can't afford the payments, right?
Yep.
We'll get them a reverse mortgage, pull out cash from their current residence, their primary residence, and they can go purchase that home in the desert, hopefully for cash. Now they got 2 residences.
So they can go there 3 months in the summer in golf, come back here.
There you go.
And you're giving them money. In this example,
Right.
specific example, they can collect from you monthly, but if there's enough of equity and money in your system, they can use that to buy the house.
Absolutely.
And if they buy the house, do they make payments on that?
No, absolutely not. No payments ever.
Really?
Never required to make payments.
This is like magic. What the heck, man?
Voila.
Finally, there's a benefit to getting older, huh?
Yeah, exactly.
Well, you got to buy a house. So if I can help you with that, my information is below. Kevin's information is below the video as well. My
Tony,
God.
this was fantastic.
Thank you.
Yeah.
I mean, the information here is just,
Right.
It sounds so good. So I would tell people they can call who they want for agents or your mortgage specialist.
Yeah.
I would suggest at minimum a phone call with you. If you're
no pressure from me, no sales.
And if you're in Orange County,
yeah,
it's even easier to meet with you, right? Because that's where we are.
Well, to be quite honest, I had an appointment yesterday in Palm Desert. So I drove out to Palm Desert to meet with these folks face to face.
Just to meet that client.
Just to meet them face to face.
Talk about hustle.
Yeah, it was good.
I don't know.
It's important.
How much coffee you drink?
Probably a little too much to be good. Coffee and Diet Coke, it's bad. But I love
to get out to Palm, was it Palm Desert?
Palm Desert, yeah.
Where it's like at 300,000 degrees right now or something?
It wasn't that warm, but it was nice. It was sunny and warm, and the mountains were beautiful.
Well, you're kind of like the Lone Ranger of real estate, of reverse mortgages. Yeah. Heidi Hi-Ho, we get out there with
that's right.
Yeah, was it Hi-Ho Silver? Yeah, that's right. We're dating ourselves.
I was going to say, Tony, come on.
Hey, I had the dolls.
You're pushing it.
I had the dolls when I was young.
Okay, a little bit too much information.
Yeah, I know. I just had a birthday yesterday. So
yeah,
okay. Well, Kevin, thank you so much.
I appreciate your time.
Thank you. As a matter of fact, I appreciate your time, and I think people appreciate your money.
Yeah.
Again, prop money, folks.
Prop money. Yeah, that's not real. Trust me.
If you're looking to get hold of some of this from that guy there, his information is below. Text, call, email.
I have a beautiful website you can go to.
Yep. And all I have to do is just ask or
just
send
give
you a
me
message.
A call. No pressure. Let's talk.
And by the way, he is this friendly in real life. So when you call him, this is what you're going to get.
Yeah. So, thank you very much. I appreciate that.
And
appreciate your time.
You're better looking in person too. See that? I know. The camera ages us. Anyway, thanks for watching, folks. Please like, share, subscribe, and follow. Please let us know how we can help. We'll have more topics coming soon with reverse mortgages. Kevin Kaltenbach. Sir.
Tony, thank you, sir. I appreciate your time.
All right. And so thanks for watching. Like, share, subscribe, and follow. And I will see you on the next video. And I'm sure we'll see this gentleman again to talk about some other knickknacks on the reverse mortgages.
You got it.
Thanks, folks.
Thank you.